President Trump said that he could deploy the military to stabilize the bond market. Things seem to be going strangely.
President Trump is causing controversy by mentioning the use of military force in relation to intervention in the U.S. bond market.
President Trump, during a meeting with reporters on Friday, was asked about Treasury Secretary Scott Bessent's response to the bond market, and he said that the administration has several intervention tools it can use. In particular, he directly mentioned the use of military force as the most powerful tool among them. President Trump drew a line when asked if he had instructed Secretary Bessent to intervene in the bond market. He explained that Secretary Bessent wanted to handle it and is someone with an excellent sense for bonds and interest rates, indicating that the response to the market was based on Secretary Bessent's own judgment. However, when the reporter pointed out that government bond yields had risen again afterward, the atmosphere changed. The reporter asked if President Trump had discussed additional market intervention measures with Secretary Bessent, and President Trump replied that there are various ways to intervene. He went on to say that one of those ways is the current measures being taken, and furthermore, if necessary, he would use military force. This is the first time in U.S. history that an American president has mentioned the possibility of using military force while explaining issues related to government bond yields and stabilizing the bond market. Earlier, the U.S. Treasury announced a plan to at least double the amount of long-term government bond purchases starting next month. The market expects that this measure could raise the price of long-term government bonds and lower yields. In fact, right after the announcement, the yield on 30-year government bonds fell from its highest level in 19 years, but then it started to rise again. The problem is that it's not easy for the U.S. government to stabilize long-term interest rates at the level it wants. Long-term government bond yields are affected by various factors, not just government policy, but also inflation expectations, fiscal deficits, the scale of bond issuance, and investors' risk perceptions. Therefore, it is inevitable that there will be analysis suggesting that simply expanding the Treasury's bond purchases alone will not be enough to continuously change the direction of the market. Secretary Bessent also emphasized in the Thursday CNBC interview that the administration has a variety of policy tools to stabilize the bond market. However, he did not specify what additional measures are being considered. Because of President Trump's remarks, it has become even more unclear to what extent the White House and the Treasury Department are actually considering market intervention. In particular, it is unclear whether the term military force actually refers to military action in the bond market, or if it was meant to emphasize the strongest measures the US government can mobilize. However, since the president's remarks themselves could influence investors' assessment of policy if they are conveyed to the financial markets, it is important to pay attention to how Secretary Bessent and the Treasury Department will respond in the future.